Hey guys, welcome back to the channel. The big dogs are reporting this week. We have Meta, Microsoft, Google, Amazon, and a whole bunch of other companies that are really important to the S&P 500, as well as the broader economy. So in this video, I want to go through some of the big names in this week that are reporting earnings, what the expectations are, a little bit about the thesis around these companies, and why I think this market is headed into an excellent earnings week going forward. If you like this content, please like and subscribe, and let's get straight into this content about earnings. Now you can see that it's already Tuesday and several companies have already reported, Waste Management, but today PayPal, SoFi, UPS, some of these major financial companies like Visa are all reporting today. I'll be covering PayPal, and then on Wednesday you have the big dogs. You have Microsoft, Meta, Google, and several other companies, major multi-billion-dollar companies like Starbucks and Coca-Cola. You have Caterpillar and several other companies. And then Thursday, you have obviously Amazon, you have Coinbase, you have Apple, Roku, Vici, First Solar, a bunch of Crocs, a lot of value plays that people have been talking about, but also major multi-billion-dollar companies. And then finally on Friday, you have oil companies like Chevron, ExxonMobil, and a lot of staples like AbbVie, Colgate, and things that tell you how the market is doing, the economy is doing as a whole. Before I get into individual companies, you can see that the market as a whole is ripping higher. You can see names like PayPal. Even today, they announced a partnership with OpenAI, and they are ripping higher, over 10%. At one point, they were over 14% higher. So going from $70 to $80. And these are names. PayPal is a name that hasn't moved that much really at all for about 3 years. AI integrations and partnerships are changing the game for a lot of companies in the space, especially the tech companies. Those companies have been ripping higher. Palantir, Google. Google is at 267 and they recently broke 270. That is an all-time high for Google. And several of these other companies are following suit. Meta is now 754, 753, not too far from their all-time highs, which are closer to 800, but their earnings are coming up. So if their earnings go well, we could see a 7-8% move up over 800, probably making an all-time high there. Amazon, look at Nvidia. Nvidia is close to a 5 trillion. It's a $4.69 trillion company. And it's having volatility. It's moving up. You can see that it went down. You can see it went down to 180, and then it came right back up to almost back up to 193. And now it's at 193. So these companies are large companies, but because the AI narrative is so strong, it's taken such a hold. And you can see this circular funding type of thing with OpenAI, NVIDIA, AMD, all these other companies, Oracle. The money is just flowing into this space and people want a piece of this. So people are paying very high prices in valuation terms to get a piece of the action. And that is traditionally not great. But if this bull market continues for 1, 2, 3 years, it's totally possible to do that. And at some point, the valuations will get stretched to a point where they won't be able to find new buyers for these names. But as the famous quote goes, the market can stay irrational longer than you can stay solvent. So that just means that either on the upside or on the downside, you could see the market being in that mode for way longer than you actually anticipate or can withstand. So the valuations are getting stretched here, but that could continue for a foreseeable future. That means you as an investor need to stay invested in the market. DCA into the market. DCA into high quality names that even if they fall, even if the market falls 50% tomorrow, you have no trouble sleeping holding that name. I have no trouble sleeping when I own Google. I have no trouble sleeping when I own Amazon. These companies will be here. They've been around for multiple recessions and downturns, and they've survived. So I have no problem holding these names. And that's what I continue to DCA into and focus my money into. Now, the first company that I want to talk about is PayPal. And PayPal, as the time of this recording, has already reported their earnings ahead of the bell. So let's go through their investor presentation and look through what they said and what they reported based on versus the estimates that analysts had on this company. So I've pulled up their investor presentation here for third quarter 2025. So let's look at the highlights. Here they said total payment volume, TPV, was 458,088, and that's a year-over-year growth of 8%, 7% foreign exchange neutral. Revenue came in at 8.417 billion, which is 7% year-over-year growth. Hey, that's an increase. That's really cool to see. So these initiatives are slowly taking hold and increasing the revenues year over year. So that's an increase, and we're seeing an increase in the year-over-year revenue growth. That's what you want to see. 6% foreign exchange neutral. Trusted free cash flow is 2.279 billion for this quarter, which is a 48% year-over-year growth. These are amazing numbers from PayPal. So they're reiterating fiscal 2025, 6 billion to 7 billion free cash flow guidance. They're raising fiscal year 2025 transaction margin dollars and EPS guidance. Amazing. Another quarter of high single-digit transaction margin dollar growth. So these are the things. This is one of the reasons that PayPal is up today, in addition to the OpenAI deal. This is what investors wanted to see. And this gives a lot of confidence to investors and potential investors in this company because they wanted to see that revenue growth. That's what I talked about in my previous videos on this subject. So let's go through the slides and see if there's anything else that we can pick out. So PayPal is a strong company today, accelerating momentum across strategic initiatives. So they just go through their numbers here. So here you can see that PayPal is a strong company today, accelerating momentum across strategic initiatives. They are reinvigorating key parts of the business, modernizing branded checkout online, offline, and agentic. Venmo and PSP growth accelerating. Omni and buy now, pay later scaling rapidly, investing for growth and returning capital to shareholders. This is key. Initiative traction across the company, providing confidence to increase growth investment. Strong capital return program with approximately $6 billion fiscal year 2025 expected share repurchase and dividend initiation. They're going to start paying down dividends. So this is huge. This has positioned them alongside those tech companies that have started pointing out dividends. Google, Meta, they've all started dividends recently. This is wild because now they're going to be doing a share repurchase and a dividend initiation. So that means that they are strongly aligned with investors' expectations of capital returns. They're tired of hearing investors complain about PayPal and their lack of returns, staying stagnant, the price is not going anywhere. The key part of this is how they're diversifying their growth. So this slide talks to how they have been on e-commerce before, like that's their traditional thing. But then now they're expanding. They're expanding into advertising. They're expanding into, crypto with their stablecoin interest from their Pi USD. They are trying to grow the segments of revenue so that they are not so dependent on one particular avenue and path. Let's look at their account and activity metrics because this is really important for PayPal. Active accounts was 438 million, and that's up year over year by 1%. That's the right direction that you want to see, even if it's not the highest amount of growth. Monthly active accounts, MAA, is 227, year over year growth of 2%. Number of payment transactions, 6.331 billion, year over year growth of negative 5%. Payment transactions ex PSP, unbranded card processing, is 4.035 billion, which is year over year growth of 7%. TPA, transactions per active account, is 57.6, is year over year growth of negative 6%. And TPA ex PSP is 36.2%, so year-over-year growth of 5%, positive 5%. So yeah, I think PayPal is in a great position. I've put out articles on Patreon that anybody can read. Go out and check it out. It's free. I've also done videos on PayPal, and back then it was even more undervalued. But with this bump up today, it's getting closer and closer to what actually worth. You can see it in the PE, you can see it in the fair value DCF models, but PayPal has been undervalued for a while. And now that investors are seeing the initiatives that Alex Chriss is doing, they're seeing that he is very aligned and aware that investors want to see a return on their capital and avoid that opportunity cost of not investing into high-flying AI stocks like Palantir or any of these other high-flying popular stocks. So let's move on from PayPal to some of the big tech names. So let's start with Meta. Now, Meta is a unique case. It's a big tech company. It has litigation about failing to protect children from harmful and addictive online environments. Social media is just a breeding ground for that stuff. So they have to face a lot of that stuff, and there could be penalties and fines associated with all of that. That being said, Meta is a wonderful company in terms of revenue generation and their business model. So their business model is almost 97, 98% advertising. And other revenue comes from things like their VR hardware, like Quest headsets, and from payments and fees and subscriptions. So that's how their business model is set up. Now, a cool thing that you can do, and this is just an estimate, it's not hard science or anything like that, but a cool thing you can do is you can look at their options chain to see what options investors, option traders are anticipating in terms of the stock price movement of the underlying stock. So for Meta, in this case, we're looking at around 24 plus 25. So they're anticipating about a $49 move. So if you want to make that, if you want to do the math on that, that is going to be 49 divided by their current stock price, let's say 751. So they're anticipating about a 6.5% move in either direction. So if Meta comes out and beats on revenue and earnings, and then also posts a really good guidance for their next quarter and the full fiscal year, you're going to see a 6.5% move up. And if that's the case, then we're looking at a stock price that's around 800, and that would be an all-time high for Meta. So that is kind of what I am anticipating. I don't foresee them failing to beat on revenue or on earnings based on the amount of CapEx spend they're doing on AI and the return that they're getting on AI CapEx spend. Meta is one of the few companies that has capitalized and is most efficient in taking the CapEx spend on AI and converting it into revenue dollars from AI, because they are almost 97, 98% advertising. That's where their revenues come from. So if they put AI on inferencing, they put AI on other things, data centers and stuff like that, for targeting people with ads, they're going to see a boost in their revenues. And I think they are absolutely capitalizing on those things. Now let's move on to one of my favorite stocks, one of my favorite investments, and one of my favorite companies, Google. And Alphabet, Google, has been rising like crazy in the past few weeks. And the primary factor for that and why it was down for so long is because of litigation. So what was that litigation about? Well, it was a recent antitrust, if you ask AI, it was a recent antitrust ruling allowing Google to keep Chrome. So they did have some penalties from the antitrust ruling. And those involved, they do have to share their search data with rivals. And they do have to stop making exclusive deals that block competitors from its search products. And that will all be overseen by an oversight committee for 6 years. So this is almost like a slap on the wrist for a company like Google. They get to keep the linchpin in the revenues that they generate. Chrome is at the center of all of their products. So if they had to divest Chrome, it would have been a disaster for Google. So this will allow them to keep their ecosystem together, and then Chrome will feed all the products and get all the search advertising revenue that they always have been getting. And now that they've integrated that with AI, there's no longer a discrepancy between ChatGPT and Google Search. Google Search can do everything that ChatGPT can. Maybe when ChatGPT was first announced in 2022, that Google was not prepared to have its search disrupted like that, their Chrome browser and their search disrupted like that. But they have answered that call well in beyond and excess of what they needed to. They've integrated AI mode. You can get a search. This whole search right now is based on Gemini's LLM, and it's giving me the exact information that I need to give you the answer that I'm giving you in this YouTube video. So they have really answered that problem very directly. But that's just one piece of Google. There's also YouTube, which is huge, and it is the best source of long-form educational content, tutorials, and how-to videos. There's no other social media or streaming platform that does what YouTube does. YouTube is the best long-form content, and that's why hundreds of thousands of YouTubers make videos on YouTube. There's no other place to do it. You can't go to TikTok to make long-form videos. You can't go to Instagram to make long-form videos. This is the best place, and this has been here for a long time. And it's probably worth a significant portion if it was isolated on its own. Then they have Waymo, and Waymo is already doing 250,000 rides a week, driverless. And people say that they haven't solved the full self-driving dilemma. And you could argue that they haven't, because they have to be in pre-programmed areas. But that's what I don't understand what the problem with that is, because that's where most people use their transportation anyways, in the cities and in pre-programmed areas. So they'll have to figure out how to make this more economical and mass produce these cars at a cheaper rate to really scale this business. But it's already proven that it's working. And you can see on the Waymo website that they do 10 million rides served already, with a 93% satisfaction rate from our riders, an experience second to none. They're available 24/7. So when they do figure out economies of scale, these cars will be able to run 24/7, no driver needed, and they will be able to produce revenue constantly, all day, 24/7. That's going to be a huge boon to Google's revenues when they do figure out the way to scale this business up. So they're working in Los Angeles, Phoenix, San Francisco, Atlanta, and Austin. That's major cities. So that's huge amount of traffic, a huge amount of customers already. If they could just, and they're coming soon, is Miami and Washington, D.C. They've targeted the biggest cities in the nation. It's a huge, huge piece to the puzzle that is Google. And people have been saying this could be worth $100 billion by itself if it was isolated. Going beyond those factors and revenue generating segments, Google has GCP, which is their Google Cloud Platform. And this is a competitor to AWS and Microsoft Azure, and Oracle and several other cloud platform providers. But GCP has around 10% of the market share. And this gives them great opportunity to grow that market share, especially when you consider things like AWS's outage that happened just a few days ago. And there is so much opportunity there for them to grow rapidly in that space. They've already been taking market share for years from their competitors. So that's a huge portion of potential high margin revenue coming in for Google. Now, speaking about Amazon and AWS, you have Amazon reporting tomorrow after the bell on Thursday. Thursday also includes many staples for the economy: Shell, Estee Lauder, Crocs, SPGI, Lilly, MasterCard. After the bell, you also have, Amazon and then Apple. Those are the two biggest ones. Apple is over a $4 trillion market cap for the first time ever, along with Microsoft. And then Amazon just reported today that they're going to be doing sweeping job cuts across the board of their company. And this is only going to improve their operational cash flows and bottom line, because they are, I believe, the second largest employer in the nation. So them cutting a lot of jobs and using robotics and other things to mitigate the loss in personnel is going to be huge for their efficiency and huge for their operational cash flows going forward. Apple's earnings should reflect the new iPhone 17 and the new iPhone cycle that we're in. So those numbers, that stock has been rising and going up as well. And then there's other things like Coinbase and other things. And each of these companies have their own particular, nuances. Coinbase is benefiting from, Bitcoin and other cryptocurrency trading and the price of Bitcoin going up. So I'm sure they'll report some good numbers there with the volatility we've seen in Bitcoin and cryptocurrencies. Yeah, and then on Friday, there's going to be staples as well. Some oil companies like Shell, Chevron, ExxonMobil, AbbVie is a nice healthcare play, Colgate, and we'll see what happens with those. But after Wednesday and Thursday, I'll have a video put together for the major earnings that have been released at that point in time, and we'll go through that together. That's it, guys. This is a quick one about earnings, what earnings are coming up and what we should look out for, and specifically talk about PayPal and Google and some of the other tech names. And then we'll get into specifics. If I see anything that warrants some type of video or discussion, I will put that together for you guys and have it ready ASAP. That's it, guys. Thank you, and I'll see you guys in the next one.